intrinsic means the essential nature of something or belonging to the real nature of something. Intrinsic value is the anticipated value of a company's stock, and it can be determined through fundamental analysis. So in short, the intrinsic value is the real value or the fair value only. It may or may not be the same as the current market value. So let's take an example. Let's say a particular stock is trading at rupees 1000 and the analysts are very bullish and they see that the stock price has to be 1500. So in this case, the 1500 is the intrinsic value and 1000 is the current market value. So it creates a very good opportunity for the investors. They can buy at rupees 1000 and come out from this investment at rupees 1500, and thus the two prices creates a difference of 50% margin. So to calculate the intrinsic value, the analyst has to look for both qualitative and quantitative factors. If you want to know more about these two factors, check out our previous videos. So once it is determined, then the calculated intrinsic value is then compared with the current market price to see if the stock price is overvalued or undervalued. Now, there could be two possibilities for an investor, and out of these two possibilities, one is ideal for the investor. Possibility 1. If the current market price is higher than the intrinsic value, or rather I should say the intrinsic value is lesser than the current market price. So this is the time when there is the investor should not enter into any particular investment because the price is already overpriced. And this is the time when an investor is already having some investments, they can come out from the investments. The second possibility, when the intrinsic value is lesser than the current market value. Now this is a time, the best time for an investor to enter into a stock, to enter into an investment, because at the buyer, the investor will buy at the lower price and he can sell at a higher price. So he can get a price differential gain also.